Today, folks, the stock market is absolutely tanking today. I was completely wrong. At least I can admit it. This clown, this fool, I thought interest rates would start coming down maybe by at the latest summer of next year, but it turns out we could be waiting for quite a bit longer, which is setting up to be an incredible opportunity. It's like the David versus Goliath story, the little retail investor versus the Goliath that is the Wall Street hedgies out there, and heck, even the political head figures. They don't know what's going on, and you quickly realize whether you have $100 or you have $1 billion, you're plagued with the exact same problem, but the guy that's smaller is more nimble. He can take the information and then trade against the hedges. I'm going to explain to you what all of this means in this video, but I'm explaining to you the importance of saying why I'm wrong, because most people will not admit it, and especially the political head figures that run for office, they bury this, they hide this, and this wonderful TikTok really represents, even stepping back 2 years ago, what people thought inflation was going to look like. Take a listen to this.
I really doubt that we're going to see an inflationary cycle.
Most economic analysts believe that it will have a temporary or transitory impact.
The faster than expected increase in some of those prices is actually a good sign.
The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
This is something that will settle down.
Transitory.
And the data shows that most of the price increases we've seen were expected and are expected to be temporary. There's nobody suggesting there's unchecked inflation on the way. It's highly unlikely that it's going to be long-term inflation that's going to get out of hand. I don't know anybody who's worried about inflation.
Over the last couple of months, we actually saw it trended downward.
President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, et cetera, are high-class problems.
What is the Granholm plan to increase oil production in America?
Yeah, I don't think people understand. Even when you went to your local bank, I mean, there's people in our chat group that were inflicted by bankers saying, oh, interest rates are going to stay down for long periods of time. Inflation is going to be transitory. This is a great time to variable rate your mortgage. And they're starting to feel that pain, which if you want to chat with 6- and 7-figure investors along with myself 24/7, 7 days a week, consider going to that Patreon member group and support me a little bit, get some cool little tools and a lot of other features. But let me just get to the point here that nobody knows what's going on here. And you can get excessively rich because that's what I'm doing. And the window of opportunity just looked like it extended. And today are those days where I get excited. These are days where you can start taking advantage of not only crazy dividend yields, but this is where growth stocks need to come back down, because growth stocks are the pinnacle of what the future is probably going to be made of when it comes to these big tech companies. But whether on the US or the Canadian side of the border, this week has been pure devastation. In fact, on the S&P 500, we just broke a critical trend level. We actually went below where the lows were back in August. And I said back here, this was a great buying opportunity. And I think right here is another great buying opportunity. Let me explain to you why. Now, all of this is being driven by the Fed, which if you watch that Fed meeting, I did, it was pretty good news. I mean, they're not cutting rates. Well, not cutting rates, but they're not increasing rates. They said that basically consumer debt, which everyone's been raging about, is actually at a fairly healthy, moderate level. He's not worried about the consumer debts that exist out there, which was surprising. And then on top of that, guys, they just said, hey, look, inflation's a little bit higher. We may have to leave interest rates up for longer than we initially anticipated. Might see it till probably maybe the third or fourth quarter of 2024. And that is what kind of spooked people a little bit, right? Because if you take a look at the interest or the inflation rates, this is what's driving the Fed's decision. As mentioned, it's a self-inflicted wound. You increase interest rates, what is that going to cause to the market? Well, obviously, housing is going to get hit the hardest. It's going to cost more to own a home. It's going to cost landlords to increase, rents on their tenant. And shelter cost is one of the deriving factors next to oil and energy, which oil is always volatile, so it's going to be a defining factor on some months to the inflationary pressures. But that's why they paused. That was my prediction. At least I was right on that. They were going to take a breath and just see what happens with housing and see how this levels off in the next coming months. And it's still likely we might see one more increase by a quarter basis point, but we're obviously stuck at the level we're probably going to maintain for the next year between 5.25 and 5.5% on the interest rates. But we've already been in a technical recession. I mean, you might recall in 2022 when the market took that big dip, we had 2 quarters of negative GDP, which is a technical recession, right? Now people are calling for another recession, even though the Fed said, hey, we're going to have 2% GDP growth for most of 2020. For 2023 is the expectation. They revise that upwards because the economy, even in this tougher environment, is still growing, which is a call of a sign of a soft landing. So what does that mean as an investor? Well, I don't know what hedge fund or BlackRock or who decided to say, hey, this is horrible news, we need to sell, and everyone just started liquidating. Meanwhile, companies like Amazon on the last few quarters have been growing. Revenues hitting record levels. They've been squeezing their margins by laying off employees and refining and dining the business, and it is down 8% this week. But you look at Amazon, man, and it's still growing on a year-over-year quarterly basis, up 10% on these revenue numbers, which is absolutely stunning. Look at Google, for example. Google just introduced its Google Ads on YouTube. So if you have a YouTube channel, go under content, look at the tab, scroll to the right, you'll see a beta test for ads I know people using now, and it's leading to further subscriber growth in their channel. It's way more user-friendly. As someone who uses Google Ads, it's kind of a technical mess, whereas now they're trying to implement it in a way that's user-friendly. That could work to their favor, but Google, probably one of the better performers this week. It's only down 4%. But again, they are starting to go back into a revenue growth period where on the last quarter, they were up 7% right year over year on the quarterly basis, which was nice to see. So it looks like if this continues, we could continue to just see growth in what looks like a soft landing. And you want to know how scared the market truly is? Look at companies like Berkshire Hathaway. Berkshire has been holding its all-time highs here. It's one of the best performers. It's down like 1.2%. I still think Berkshire is probably at a good value here, to be honest, but this is where people are going to hide out. High interest savings accounts, they're trusting the OGs of the OGs like Warren Buffett, and they're just piling endless amounts of money into this. So I'm kind of blown away by the performance of Berkshire stock, which is starting to outperform the S&P 500 on the last 5 years by probably over 10%. Berkshire is one that I've always debated on putting in my portfolio because they're a really good way to get global diversity and literally probably the best fund managers that currently exist on the planet. I've always just had a little bit of fear of what happens when, you know, the unfortunate event comes that the two legends pass on as they head into their 90s here, and what that means for the company is I'm sure most of the underlying employment and management have gotten the feel out now how to invest. But I mean, I'm pretty sure Warren Buffett and Charlie Munger are huge deciding factors, especially when they were purchasing those commodity companies in Japan. But I like that Berkshire is kind of like an ETF that you can hold as well. But it's devastation across the board for growth. I'm not the biggest fan of some of these growth vectors. I do like PayPal, but when it comes to AI stocks like Nvidia and Palantir, I think these things could see a much more dramatic pullback. I mean, I think back here somewhere around the 400s, I said this is probably going to be around the peak of Nvidia, and it looks like we're getting back to those numbers. But again, honestly, I think these pullbacks are going to be a little over exaggerated because we're heading into the end of a quarter, and if earnings are anything like they have been, I think we're going to see some, you know, pretty decent market here, in my humble opinion, but I hope it persists. I like when it goes down. I got a ton of capital I need to build up to re-top up my tax-free savings account at the end of this year, and that's what I'm fighting for right now because, you know, the yields that exist out there, muy bien, so juicy, and same with some of these growth vectors. Everything's looking so good. It's nice. You got to enjoy these moments, baby. This is like walking into your favorite store and getting a discount, but let's go and tell me what you think in that comment section below.